All right, let's dive into a topic that feels complicated to a lot of people, but is absolutely key to building real wealth. We're talking about investing. Today, we're going to cut through all the confusing jargon and give you a simple, powerful roadmap to make your money start working for you.
I mean, does this question hit home for you? That feeling of just trading your time for a paycheck day in and day out with no real end in sight? Well, that's exactly the problem that investing is designed to solve. It's all about building a future where your money is out there earning an income for you, even when you're sleeping.
So what even is investing? Seriously, forget all the complicated stuff you see in movies. At its very core, it's just this: putting your money into something that has the potential to generate more money over time. It's the big shift from you working for your money to finally making your money work for you.
Okay, so we're starting with the big why. Before we get into the how, we need to understand the tools of the trade. The actual things you can invest in. Let's take a quick look at the most common options out there.
You've got a lot of choices, right? You could own a tiny piece of a company you love by buying stocks, or you could basically become the bank by buying bonds and lending out your money for interest. You can even buy a pre-made basket of different investments, things like mutual funds or ETFs. And of course, there's physical property and even high-risk digital assets like crypto. The key thing to remember is that each of these has its own unique mix of risk and potential for growth.
But hold on. Before you even think about putting one CD into any of those things, we have to talk about your financial foundation. I mean, you wouldn't build a house on shaky ground, right? The same thing goes for your money. You absolutely have to build a safety net first.
And listen, this stuff is non-negotiable. Seriously. That high-interest credit card debt, it'll eat up your investment gains faster than you can make them. An emergency fund is what keeps you from having to panic sell your investments when your car breaks down. And living below your means, well, that's where the extra money to invest comes from in the first place. Get these three things sorted, and then you're ready to really get in the game.
All right, foundation is secure. Now let's learn the fundamental rules of the game. And here's the good news. Every single investment, no matter how complex it seems, is governed by a really simple two-sided principle.
It all boils down to this: risk and return. They're two sides of the same coin. You can't have one without the other. Generally speaking, if you want the chance to make a bigger profit, a higher return, you have to be willing to accept a higher chance of losing money. That's the trade-off.
And you can see exactly how this plays out in the real world. A savings account? Super safe, very low risk, but the returns are tiny. On the other end of the spectrum, you've got stocks and crypto. They offer huge potential for growth, but that comes with a much higher risk of losing your shirt. Your job as an investor is to find that sweet spot you're comfortable with.
Now, beyond just risk and return, there's a force in investing that is so powerful, Albert Einstein supposedly called it the eighth wonder of the world. This is the real secret sauce, the thing that turns small, consistent savings into life-changing wealth over time.
So, let's say you start with just $1,000. A solid start, but it's not going to change your life on its own, right? You invest it, and you're aiming for about a 10% return each year. Okay, so after year one, your 1,000 becomes 1,100. But here's where the magic happens. In year two, you don't just earn interest on your original 1,000. No, you earn it on the whole 1,100. Your earnings start making their own earnings. It's like a snowball rolling down a hill, getting bigger and bigger and faster.
Look, this isn't some kind of financial trick. It's just the pure mathematical power of compound interest. And the single most important ingredient it needs to work its magic is time. The earlier you start, the more powerful this force becomes.
So, we get the why. We've built a foundation, and we understand the rules. Now, we get to the most important part. How do you actually do this? Let's put together a simple action plan.
So what can this look like over the long haul? Now, that number might seem huge, but you know how it was built? By investing just $200 a month for 20 years. That's it. This isn't about some get-rich-quick scheme. It's about the incredible power of a simple, repeatable plan.
So how do you get there? It really just comes down to these three simple rules. First, just start small. You don't need a fortune to begin this journey. Second, be consistent. Make it automatic, like paying a bill. And third, and this is the golden rule of investing, diversify. You've heard it a million times, but it's true. Don't put all your eggs in one basket.
So what does diversify actually look like? Well, something like this. You're not betting your entire future on one single thing. The idea is that if stocks have a bad year, maybe your real estate investments do pretty well and balance things out.
It's this balance that protects you and allows for that nice, steady growth over the long run.
And finally, let's talk about the most important tool you have. And it's not an app or a stock tip, it's your own mind. The numbers and the mechanics are actually the easy part. Real success in investing is all about psychology and discipline.
You have to avoid these traps. Hype and panic are your absolute worst enemies as an investor. Markets will go down, that's normal, it's part of the cycle. Your job is to stay calm, stick to your plan, and never, ever make big decisions based on fear or greed. If you only take one single idea away from all of this, let it be this one. Investing is a marathon, not a sprint. Real, lasting wealth isn't built in days or weeks. It's built slowly, patiently, over years and even decades. Patience is your superpower here.
So there you have it. We've covered the why, the how, and the mindset. The knowledge is officially yours now. The only thing left to do is take that first step. So the real question isn't if you should start, but how you're going to start. What's your first move going to be?